Hey guys, today I just wanted to take the time to make a video about patterns in the market and how we can trade them, how we can look for profitable setups with entries and exits. There's many different types of patterns in the market, and they go up and down. And we can see these patterns one way, and we can see them flipped upside down. For example, the head and shoulders or the cup and handle, we can see these things, the inverse head and shoulders, an upside down head and shoulders pattern, or an inverse cup and handle. And like I said, we can look at all these different types of patterns and use them to identify entry and exit signals for trades. We have patterns that are bilateral, meaning we can trade them in two directions. And as you can see, when your trend line breaks, it gives you an entry. And the opposite side, so if you entered this position, pull out a laser pointer for you guys. So if you had entered this position because it was breaking below your trend line, you could use this level as a stop. It starts breaking the upside. It's changed direction. It's not the trade you thought it was. Before it gets really out of control, you stop your loss. Set a stop loss right here. Or if you thought it was coming up this way, this was your entry, then it changes direction, it starts heading down, you can use this level as your stop loss. And it's important to be making a plan whenever you're in a trade, before you're ever in the trade. And if you're trading patterns, it's important to understand what the pattern says price is going to do, so that you can formulate that good plan. Now, some of the patterns that I look for the most are these continuation patterns, the bull flag and the bear flag. And I see a bull flag and a bear flag in basically three different ways. There's pull up my laser pointer, the impulse move, followed by some consolidation as price tightens in this wedge. And then when it breaks out, breaks above the wedge, starts heading higher, that's a good entry point for us. And like I said, breaking the bottom trend line would be a good stop loss. We can have this bull flag pattern and a bullish rectangle. Price can move sideways in this trading range, bouncing off support and resistance until finally, price breaks out. And we can have this in a pennant where price just gets tighter in this, kind of symmetrical triangle looking thing. And just like an inverse head and shoulders, we can have these continuation patterns going down. You have the impulse move, followed by consolidation and a wedge pattern. Or you can have that trading range rectangle, or the pennant. And whenever we're looking for these patterns, it's really important, especially in your trading, to understand how to identify the trend. So I just want to make sure you guys are aware. An uptrend is simply defined by candles that are making higher highs and higher lows. A downtrend is defined by candles that are making lower highs and lower lows. And the market can only move in three different ways. It can go up, it can go down, or it can go sideways. And whenever it's going sideways, and as you saw in those patterns, that is an area of consolidation before price either breaks out or breaks down. And these areas, this is where they're picking up buyers. More sellers are starting to step in. And when price breaks out or breaks down out of the pattern, that provides us with entries and exits. So I want to take a look at the ETF SPY over the past year. And I am going to show you guys some patterns that I saw over the last year. Okay, so let me just make sure you guys are seeing the correct stuff here. Okay, so if we start over on this side of the chart, we work our way over, all right? The first thing I remember seeing back, last March was, or well, I guess it took It started in March, but I didn't see the pattern until more June. But what we have here is a classic head and shoulders pattern. That right shoulder is a little higher maybe, but you can still see it. We have rejection here. We have rejection and a high. And when price broke below support, this was support over here. When it broke below, let me zoom in, broke below, and then we held below. You could have used this level as an entry, right? And you want to stay in this trade. Well, so we have some support over here. So if you have watched my video on support and resistance, you want to identify these support and resistance levels before you're in your trades so that you can understand where is a good place to take profit. And as we can see, there's a support level over here. I mean, you can go to the bottom of it, but don't be greedy, right? Maybe we even move it up here because it's 2 touches and this candle never closed below. It went down below, but price got pushed all the way back up and price closed above this level. So we can say that this is a good price target. Go ahead and make it green. And this would have been our support level or our entry for that trade. Right? When price came back up, back tested, could not get back above that support level. Support through here, couldn't get back above it. That was a good entry to this target, right? All right. So we see that pattern. We see how we could have profited from it. Right after that, I'm going to move into this next section. Right after that, we have this impulse move up. And let me actually zoom not so far out. Take like this section. Okay, we have this impulse move up. Price consolidated. Maybe a little bull flag here. Okay. And when price broke above our resistance, or even this resistance level that we have through here, and we were able to hold above, I mean, if you get a guy in here, and we have a hanging man candle, that would have been a good signal to be maybe closing your trade for some profit. But this pattern gave us an idea of where price wanted to go, especially when we're breaking above previous resistance levels. We have resistance through here, and when we're holding above that resistance level, you could have used this as your entry, this support line as your entry, or this support line as your entry. As long as price held above, you knew that it was trying to break out, it was trying to go higher. And you can set a target, say halfway up is your first target. There's target 1, get green, so you remember to take profit when that's happening. Oops. And you can set a price target too, all the way up. So it's more halfway. But unfortunately, you want to be taking your profit on that position because it never was going to, or just didn't get there, probably not in your time frame. Okay, but still, we were able to see that price really wanted to go up, especially once we started holding above previous resistance levels, right? And even another resistance level you could have used as your entry. The price, got above here. Like we said, we have a hanging man candle. We have a hanging man candle, then long rejection from the highs, then price starts moving down. But when we got back above, and price was holding above, and even making higher lows when it pulled back, higher lows, that was a good signal that price wanted to continue higher. Okay. All right, so we've found a head and shoulders here, found a bull flag right here. Let's move forward through this section. Okay, so we can see the market's at some resistance through here. There's resistance, up a little bit. Tried to get over, couldn't. Tried to get over, held, but just couldn't stay above. Well, first off, when you notice that happening, this was a good entry to go short. Resistance. You could have gone short at this resistance level when price was not able to continue holding above, and it really wasn't. If you didn't like that, maybe use the support level through here. And when price started breaking below, that was a good signal to go short. And really what we have through here is kind of a double top. Not perfect, but nothing's ever necessarily perfect. I would also call this a double top right through here. 1, 2. Try to get over once, failed. Try to get over twice, failed. And again, the support level, if you don't like this as your entry, there's another one through here. And if you have not watched my video on support and resistance, I highly suggest you go take a look. Okay, so we have that top here, double top. Another version of a double top, if you look maybe on a higher time frame like weekly, this would have looked like a weekly double top, probably. I don't know if this is maybe 2 different weeks, but anyways, so what else do we have? Well, right through here at the bottom, when it went to the bottom, kind of looks to me like a triple bottom here. Came down once, came down twice, came down a third time, back up. Okay. And through here, let's see this big cup and handle pattern. Sorry if I'm not making this pretty enough, but just trying to illustrate it to you guys so that you can see. And this cup and the handle here, the resistance that we knew the market was having trouble getting over, right? We have all this rejection, resistance. And when price got over, held above it, this was a good level to use as a stop loss. This is a good entry. So you could have gotten in at this level, and as long as price held above this level, you'd want to be in that trade. And if you measure from the bottom of the cup to that resistance level, again, sorry, this is not exactly perfect. Oops. But you can kind of get some price targets. And say halfway up, it's target 1. All the way up would be price target 2. Okay. So, you can see these patterns are everywhere. They're always showing up, and this is just on one time frame. These patterns show up on many time frames. And they're really, really powerful at helping us identify, where the market doesn't want to go, right? When you see a head and shoulders pattern, the other shoulder, you see this shoulder, and you start realizing, oh, there's a head and shoulders pattern. The market doesn't really want to go higher, not yet. There's not enough buyers to make that move happen. And then when you see, prices breaking above that resistance level, right? Breaking above that resistance, holding above, that's when you start thinking, okay, the market wants to head higher, right? And then you have another resistance. So it's all about just simply being able to formulate a good plan for entry, a good plan for exit. And it's also all about being able to identify the trend. I'm just going to focus on this section, which actually, we had talked about those rising wedges and falling wedges. And we kind of have one through here. Price was in this narrowing price range until It broke, then we went lower until it turned around. And again through here, it tried to break out, but it couldn't widen this range, and then when it broke, price went down, right? So being able to identify these patterns is just really powerful for identifying a plan. And to really be able to identify the patterns well and to be able to trade well, to maximize your capital, maximize the way you're using your money, you need to be able to identify that trend. And we were talking about it before. It's that higher highs and higher lows for an uptrend and lower highs and lower lows for a downtrend, because we know the market can only move three ways. It can go up, it can go down, or it can go sideways, right? So let me come down to a low time frame just so it's really easy to show you. But we can see the market was heading lower. Lower highs, lower highs, lower lows. Okay. Then higher low, and candles start making higher highs and higher lows, up. And then through here, it's really just sideways, up, down, up, down, up, down, right? I mean, candles are getting longer to the downside, but lots of rejection, lots of rejection. And then trend continues up, higher highs, higher lows. So just something I want you guys to be thinking about when you're looking for these patterns, because it's really important, like that bull flag pattern, to be able to recognize when it ended. It started down here and ended up here, right? Because then the trend is down. You can't say this bull flag pattern goes from here to here. That's not correct. So just something to be thinking about. Uptrend is higher lows, higher highs. A downtrend, lower highs and lower lows. Doesn't have to be forever. We just want to know when the piece of the trend, when that impulse move is over, because this is the move that creates the momentum that will take the market higher, or take the stock, equity, whatever you're looking at, higher. Okay, guys. Well, I hope you found this video helpful, and please check out the other videos I have on my website. Been posting a good number of helpful videos. All right, have a good day.